Welcome back to the Wilson Weekly, and as always this morning, good morning, Dr. Andrew Wilson.
Yeah, good day, Graeme, and we're just about to say goodbye to March. Yes, March is gone.
Wow.
And hello, April. So we've got April Fool's Day on Saturday. So the year's whizzing by, and we say that, I suppose, every week, don't we? But at least we can highlight the fact that there's another month gone. And what a month!
Well, we should have known
really.
that because hot cross buns have been on the shelf since Boxing Day, so we knew Easter was just around the corner.
Yeah, that's true. And Easter comes the first week or the end of the first week in April. So I hope you've been dieting in anticipation of the gorge.
I've finished my 60 strong, and I'm now finishing my 75 hard on the 6th of April. I am out, and I have my 40th birthday party that weekend. So Easter eggs and food and everything, it's on.
Here you go. Here I come. Right, all good, mate. Yeah. So, but it's been another good month, I guess, if you're a homeowner, virtually across the board. And we'll look at some preliminary stats that we've got for March. They'll be pretty close to the end result. We did have a mid-month update. So we've now got basically the end of the month stats for house prices and unit prices. And again, reinforcing, Graeme, that markets are on the up and up, particularly Melbourne and Sydney markets. And, I guess you can have 1 month where prices sort of move above the line and get back into the black. But really what we're looking for is some consistency. And that's what we're seeing now, because Sydney's reported its second month in a row of higher house prices and also higher unit prices. And Melbourne's now back in the black, Graeme. Yes, Melbourne's growing as well. So the big two, I guess we could call them that in terms of population at least, they're growing again. And I think that buyers out there are starting to think, hello, prices are growing. They're still below where they were a year ago. And I don't want to miss out, so let's get going.
We did say, Doc, that, Melbourne had such a severe, lengthy lockdown compared to anywhere else in the world. We did say that given it was so greatly affected, that it was going to have probably one of the strongest rebounds out of anywhere. And I think it's Sydney as well. Obviously, it's been hit pretty hard, but if you were trying to time the market, you might have just missed the bottom.
I think you missed it in Sydney, Graeme. It's a bit of work. Well, two in a row. And we've got prices up over 2% this year so far, Graeme, in Sydney. Mm-hmm. Now, still below where they were a year ago. But I think this is part of the psyche of buyers is, it's a good time to get in because prices are still lower than where they were a year ago, but they're on the rise. Look, the key to all this, of course, for consolidating a revival is in our interest rates. And we know we've got an interest rate decision coming up next week for April. And, of course, the Reserve Bank keeps telling us that, basically they don't know what they're doing, but it will depend on the data as it comes through. And I'm just being a little facetious there when I say they don't know what they're doing. But they do say that, look, it could go up, it could go down, it could be steady, but it will depend on the data coming through. And as we've seen, as we've done these weekly podcasts, Graeme, the data certainly is reinforcing the fact that higher interest rates haven't done anything. We've still got a very, very strong economy. And the latest data we had out, which we'll look at shortly, were retail sales. And it's saying the same thing, that people are still, enjoying what is one of the strongest economies we've ever had. So that can only surely mean higher interest rates. But then we had the banking sector issues in the US. Does that mean they won't put them up as much because it has probably a quasi effect on the economy, banks tightening up their lending. But the US put up their rates again just a couple of weeks ago. So, next Tuesday, we'll discuss that very shortly. We've got the Reserve Bank meeting again and making that April decision. So I'd be pretty confident that it's going to be another rise, Graeme. But it hasn't stopped the housing markets.
Do you think, Doc, let's just, the 0.25, give it away. Do you think just go 0.5% and whack it on the head if you're really serious about believing that rates can tame inflation? Should we just give it a red hot crack?
Well, the drip feed hasn't worked. So I guess you get to the point where
you've got to ask the question, right? So it's not, we're just we're trickling and everybody seems to be just adjusting and everything's still happening and still growing. So do we need to give it a whack on the head maybe? Or
Well,
at
look,
least consider it?
well, you've got to do something because it's not working at the moment. Now, you can keep going up and up gradually. The problem is, of course, that once you turn the corner to where the economy is starting to decline, it can be too late and it creates its own momentum and starts, it's hard to stop it, continuing to deteriorate. So, that's the challenge for the Reserve Bank. They're aware of that. They know they have to be careful. So that means, well, maybe they can't go hard because it'll be a bit more of a sledgehammer. But, there might be an argument to say it's better to go hard early than dent consumer confidence than it is to just go gradually, bit same old next month, same old next month, same old next month, till you sort of hopefully reach that critical mass, which may be, too high. But look, it's a conundrum. We know that. These are very difficult times for policymakers, particularly the Reserve Bank. And really, they cannot point to anything that shows success in what has been 10 consecutive months, with the exception of January, of course, where they don't meet, of interest rate increases. In fact, the signs are stronger than where they were a year ago. Now, inflation has fallen, yes, but the decline in inflation would have happened anyway, because it was about supply catching up with all that demand that was released through COVID. And supply has caught up. We've got fuel prices well below where they were at their peaks. The price of oil is half of where it was a year ago. And all the other bits and pieces, the roadblocks for furniture, for appliances, for new cars, all those are now starting to adjust because, manufacturers are getting everything back geared up to cater for the higher levels of demand that were created through the COVID stimulus packages. So what I'm saying is it might have happened anyway, regardless of higher interest rates.
Yeah.
And I think that's the case because that was all about those shortages of goods coming through to match demand. Now, the other thing that's happening now in terms of inflation is that we're seeing higher services costs because, people are bidding up their wages to cover higher prices. And therefore, your employers are going to start thinking, oh, I've got to cover these higher wages with higher prices, and on we go. And that's looking like what's sort of happening now. And that's the main game in terms of interest rate policy. But to date, really, I think that a lot of the adjustments that we've seen in inflation, and it's still way too high, Graeme, would have happened anyway.
True. Well, Doc, let's rip in. Let's have a look at the data over the last week. And I guess you could say almost for the month, pretty much.
Yes.
Won't change too much.
Yeah, we've got some very interesting data this week, Graeme. In fact, we've got the latest rental data. So if you're a tenant out there, maybe you should block your ears a little bit because it was a rip-roaring month for rents over March. And look, probably good news for landlords and investors, those that have investment properties, because rents, if anything, are rising even stronger. But we'll talk about the rental market and a couple of thought bubbles coming up from policymakers. No surprise.
Yeah, Doc, that's a really important one because I'm seeing, panels and journalists and tenants and landlords, and I don't know if people understand. It's a bit like wages in the US and Australia. I'm a landlord. I've got multiple properties. Now, I'm providing a service. In lieu of that, I get certain tax deductions and benefits. But if I have a family in a 12-month lease and they signed, say they signed 10 months ago, 11 months ago, or even 5 months ago, and I've had these consecutive rate rises, I'm paying that additional interest across that total debt and any other debt I have, but I can't adjust the rent. So there's a certain lag effect here that, I know tenants are up in arms. I've got friends, family, clients that rent, but the landlord actually goes several months at probably a heavier loss to put a roof over their head in hope that it goes up in value before they can adjust it and try to not just claw back, but even try to get closer to breaking even of keeping that roof over their head.
Yeah, there's it's a perplexing problem, Graeme, because we can see if policymakers start interfering in housing markets, there's the law of unintended consequences. It just doesn't work. We have a very strong private rental market in this country. It provides 30 to 40% of all housing. And here you are, you've got a rental crisis and you're trying to make it harder to become a landlord, by such policies as, rent control. And we saw when APRA, with their experimental policies back in 2016, where they targeted investors, told the banks to stop lending to them. And that's really been, I guess, one of the catalysts for the crisis that we have at the moment, is that that landlords were treated as persona non grata by banks. And here we are, we've run out of rental properties, so put your hand up to that one, APRA. And they say, well, it's not our business to control the economy. We're just trying to keep risks for banks down. But all that was predicated, those actions by APRA, on their forecast that interest rates were going to rise. Well, that was the complete opposite to what actually happened. So as I said, beware the law of unintended consequences, and policymakers stay out of housing markets. And hey, Graeme, guess what? Last Saturday we had the New South Wales election. Guess what, Graeme? The government fell. Guess what, Graeme? One of their marquee policies was to replace stamp duty with land tax for everyone. See you later, New South Wales government. As I said, at your peril, start fiddling with the housing market. Now, the other states have clearly said, we're not changing stamp duty. We're leaving it. No, never land tax for us, right? And we only have to go back to 2019, which I suppose is a bit of a way back now. And we remember that the then Labor opposition was going to stop negative gearing. That was its big policy at the time. Well, of course, they were supposed to. Well, they lost the unlosable
election.
Yeah, and there was a huge debate about negative gearing.
If people aren't picking up on what Doc's saying here between the lines, don't mess with housing policies in Australia, because you're likely to lose your term in government or power.
Yeah, and it's a little bit broke. Well, look, we are in a cyclical adjustment that's, it's exacerbated by a number of factors for the rental market, low supply, surging demand because we've opened our borders again, and higher interest rates and high inflation. It's a period which is going to take which is challenging, and is going to take, some time to work its way out. But we're now paying the price for those interferences in lending policies, B, the issues that we've had stopping development, all the roadblocks to new development, and they're even worse now because we have, skyrocketing building costs, which make it even tougher to get new houses and units. And we've got these issues of inflation and higher interest rates. So, politicians, and I've, seriously questioned the capacity of some of those, are coming up with these thought bubbles. And the first one is, let's cap rents or keep them rising by X amount every year. And all you do then is put the other, and it's almost like the politics of envy, that's like, oh yeah, the let's pick on the slumlords, the landlords, Well,
if you're gonna cap rents, and you're not going to cap rates, which you can't do that, the economy will fuck. If you're going to cap rents, you got to cap rates, and if you did that, or if you didn't cap rates and you capped rents, all the private landlords are just going to liquidate their assets and cash in, and the market's going to crash, and no one will have private rentals.
And maybe, the sort of lefties who promote these types of policies will sort of answer the question, who's going to buy these properties? What do you do with them? Like I said, politicians are here today, gone tomorrow, as we saw with the New South Wales government. And part of the peril they created for themselves were these sort of loopy policies to try to introduce a broad-based land tax, and all the economists who were cheering that one on were the same ones that were cheering on, let's get rid of negative gearing back in 2019, and they all
how do we sack the economists with the outgoing government that are wrong too?
Well, we don't, because we just realise that 90% of the time they're just plain wrong, right? But they keep on keeping on. And it's all this equivocating type of commentary that they use on the one hand this, on the one hand that. Now, I'm an economist, and I try to be a little bit more forthright in my pronouncements, which, at the end of the day, you can't be completely, this is going to happen and this is going to happen, because it's about human nature. But it's a bit of a game with most economists, and a lot of economists line up, on one side of the political equation, and their pronouncements are there to support that particular political equation, right? But hey, they got it wrong, in terms of at least what the public wants in terms of property taxes, And the other point about the public, Graeme, is landlords vote too, Graeme. You just can't be, shoving it up the landlords and expecting them to come on board and vote for you. So beware politicians, as I said, the law of unintended consequences when you start to fiddle, particularly with housing markets. And nobody's denying that these are difficult times and that there are going to, it's a complex environment, and it will take some time to improve the lot, particularly of the tenant. But it's not just about, trying to control the openly visible problems such as higher rents. You've just got to sort of get involved with particularly improving the supply of rental properties. And the last thing you do is to try to knock the private sector on the head that is prepared to take the risks and become residential investors, which would only mean fewer properties or higher rents, and I'm not sure there are that there aren't legal issues that would stop them from these types of policies. But, you shake your head at some of the things politicians say, and unfortunately some of the things that they do, and they can pay the price, as we saw last Saturday.
There you go. Well, let's have a look at what happened.
We've sort of got off theme, haven't we? But we've covered a lot.
That's all right.
We were going to cover anyway.
I think it's good to have a bit of a rant every now and then, Doc. I think it's important for our listenership and viewers to understand why things are happening and why people are voting the way they are, or why certain policies are perceived certain ways. And that, home ownership or a home is a commodity. People need a roof over their head, whether it's owned, rented, private. We all need a roof over our head, and we don't have enough of them, sadly. So it's a hot topic.
And it's an essential good. But we've got, I guess, the hottest of topics coming up next week, and that's interest rates, Graeme. The RBA will be meeting for the third time this year to decide which way interest rates will go for April. I think that the RBA is set to increase rates again by 0.25%. The economy certainly has shown no signs of slowing down. We saw those unemployment rates that were released 2 weeks ago, again down to a record low unemployment rate. And retail sales data was released this week, Graeme, for February. It rose again. It's not tracking at quite the same levels as it was at the end of last year, but it's still miles ahead of the pre-COVID retail sales measures. And, it grew, it increased. So even though maybe you could make a case for saying it's not rising as strongly as it used to, maybe that's because of interest rates, or maybe it's just, still a very, very strong number. And, it just represents perhaps a lot of the purchasing that happens post-COVID now just easing slightly. But the other point is, and it'll be interesting to see what the Reserve Bank says about house prices, because they've been front and centre in regard to, house prices are falling in their commentary every month. But I'm not sure, because our data set is certainly showing house prices rising again. And I think that there will be a similar result from the other data modelers. So I'm not sure how higher house prices works into the RBA modelling, but certainly all that data that we've had over the past month is certainly not showing any signs that it's doing the job that higher interest rates are supposed to. So I think the Reserve Bank will once again just have another tap on the brakes and put it up by 0.25%. And that's the cash rate there, Graeme. It stands at 3.6%. Of course, it's actually still quite below where it was at the previous peak of the interest rate tightening cycle back in 2011-12, where it reached as high as 4.75%. So, I mean, maybe that tells you that we're still under the mark in a way in terms of where our interest rates should be, because they're still well below, official rates are still well below where they were back then, although our inflation is certainly higher. I mentioned retail sales. You can see that increase we had in retail sales over February, well ahead of where it was a year ago, even though the rate of growth is a little bit less than where we had through spring last year. The labour market, we've discussed that. It's booming. Record low unemployment rate, 3.5%. We had 64,000 jobs created over the month. This is February data. Unemployment numbers down. Participation rate was up, so more people came into the workforce. And we still had a lower unemployment rate and created more jobs. And all states are reporting low-level unemployment rates. And, 10 months of rate increases really haven't done anything. And, does it get any better than that? I don't think it does, Graeme. That's a very strong result. And again, not something the Reserve Bank would be looking for. And the January numbers maybe gave it a glimmer of hope that higher rates were starting to work. But forget about it now, because February, boomed again. We've got to take this data with a little bit of a grain of salt, Graeme, because the seasonal adjustment models have been a little bit out of whack because of COVID, what happened during COVID. But nonetheless, it's certainly a better result than January, and that unemployment rate is now back to the lowest we've recorded on a monthly basis ever. And creating jobs, and it's a very good number. Again, nothing there to suggest that the Reserve Bank would pause rates or that its job is anywhere near done. House prices rising over March. Well, we'll get the official data released on Friday, Graeme, which is we always do the last day of the week. So look out on LinkedIn for that, and hopefully in the media as well. So here's a little bit of a sneak preview. The numbers will be just about the same when we have the final data through. But you can see there, 2 quarters in a row, the national house price has increased. Sydney and Melbourne up. Sydney up 1.5%, Melbourne up 1%. In fact, most capital city markets recorded increases in growth. The big five did anyway over March. So there's some consistency there, Graeme, in terms of most capital cities recording higher house prices over March. Still a bit down on the year before. The best performer over the past year has been Perth, and I put the 2-year numbers up just to put it into some context, just how strong, despite those falls over the past year, how strong prices have increased.
Those 2-year numbers, Doc. I mean, geez, you would have hate to have been out of the market.
Absolutely, yeah. And again, it's an adjustment process, but it looks like we've bottomed out now. A lot depends on interest rates, where they go, of course. But we've certainly to this point in time overridden interest rate increases, and those price growth, as I said, Sydney again, Melbourne up for the first time since April last year, and the other capital city markets also increasing, but 2 in a row for Sydney, the big market, and of course that's influencing the national house price. And the national house price, as we keep emphasising, is a weighted average based on the size of these markets. And of course, that means basically it reflects what's happening in Melbourne and Sydney. So, of course, with Melbourne and Sydney rising, and Brisbane, rising, which is the third largest market, we would expect the national house price to rise. So, again, these are better numbers in February, Graeme, and again, better numbers in January. The momentum is clearly upwards now with housing markets. I think we've bottomed out in Sydney and maybe bottomed out in Melbourne. And I think, the future will depend on rates. And if, the Reserve Bank's been sort of fiddling with the concept that it might put rates on hold, I don't think that's going to happen. But certainly if rates were on hold, that would only add to or fuel housing market activity going forward. Units, similar story there, Graeme. National unit price up 2 months in a row now. Again, Sydney and Melbourne leading the charge. Adelaide, which is a smaller unit market, had the best result. But again, most of the capitals recorded higher unit prices over the month. And look at those results for Adelaide and Brisbane over the past year, Graeme.
Yeah.
They're still nearly 10% or just under 10% and just over 10% higher than where they were a year ago, despite all those increases in interest rates. So good results there for Adelaide
And
and
you'd think
Brisbane.
it's based on affordability, Doc, yet Perth and Hobart and Canberra haven't had the same growth. So it's not
And,
just based on affordability.
and those markets are small markets, Graham, more or less, particularly compared to the
Mm,
big three. Um, and Brisbane, I think, is the standout there that it's still
yeah.
growing. It's had just under 10% growth over the past year. Very strong result, just under 30% or pushing towards 25%, Adelaide under 30% for growth over the past 2 years. So, and that has quite a substantial unit market now in Brisbane. And it's a sign of the times, and we'll see that with the rental data shortly. It's a sign of the times that, demand for units is increasing, not just based on affordability, but other factors too, particularly that's becoming a preferred lifestyle. So the March quarter
Yeah.
median house prices are still rising after February's increase. Melbourne house prices are now rising, first time in nearly a year. Sydney market looks to have bottomed out and has continued to rise. Most capital city unit markets are rising now, and national house and unit prices are rising over 2 consecutive months. Encouraging start to the year despite those higher rates, Graeme. So we did speak about the rental crisis, and I'm not one for extravagant language, particularly on the negative
Yep.
side of the equation. But I guess we've got to call it a crisis now. And when you look at these numbers, you'll know why. It's deepening, and there's certainly no relief for tenants with the March data facing already record high home rents. We've had another surge over the month for both houses and units in most capitals. And as we just alluded to, unit rents are leading the charge. It's a very strong result over March, and I guess we're going to have more conversations from governments because of pressure from tenants of how to fix this problem. But it's a conundrum, and it's got some way to go. These are the rents for the month. Sydney still has the highest median rent, but look how that gap is narrowing in Sydney between unit rents and house rents, Graeme.
Crazy.
There was a real surge in Sydney unit rents over March. And you can see the same story really everywhere except Adelaide, where
Everywhere.
unit rents are really now starting to get to the same level as house rents because, high house rents are forcing people to look for more affordable options. And of course, that's the unit market. Look at these monthly results, Graeme.
Wow.
House rents up across the board everywhere and up strongly. But look at unit rents. This is over the month, mate, right? 7.5% increase in Sydney median asking rents for units over the month. This is just, very tough times for tenants to see these sort of numbers coming through. We shouldn't be surprised. Last week, we looked at the latest migration numbers, Graeme, which were from up to the December quarter last year. So it's a bit backward looking. But we saw that net migration into New South Wales had topped 100,000 over the year ending the September quarter. And we know that's increased since then. And of course, this is one of the reasons why we're seeing such high demand for rental properties, particularly in the Sydney market. It's being driven by, the wave of migration that we have. And of course, as we've discussed before, China has announced that it's opened its borders again, no COVID lockdowns. It's encouraging its students to go offshore to do their courses, and they're heading for Australia. And Australian universities and higher education facilities are all saying that they want to move more towards a face-to-face model for their education purposes. So again, we're going to see waves of students coming in looking for somewhere to live, and that'll put absolutely pressure on the rental market because they're temporary. They only have temporary visas. So even though a number do buy, they have to sell once their visa expires. So they're more inclined to be renters rather than buyers. And again, maybe that explains this extraordinary growth in rentals over the past month. And no surprise, look at our price. These are annual rent changes, Graeme. 37% increase in Sydney, 29% increase in Melbourne over the past year for units. All big numbers, 22.7%. Now, we've got a bit of an explainer here. These are crazy numbers for Melbourne and Sydney. I've seen some other data modelers, and there has been questions about them not showing the same level of increase. It's only really one other one that's showing lower numbers. But let's think about this. Melbourne and Sydney had an excess, a clear excess of units right through the COVID period. And there are a number of reasons for that. Closed borders obviously stopped students, and there was a surge in Airbnb coming into the permanent markets. We had a big building boom in units in Melbourne and Sydney through 2015-16, which took some time to absorb. And rents were actually we had the highest vacancy rates Melbourne's ever recorded a year ago. So we're coming from a very low base. I mean, rents were just over $300 a week in Melbourne for units, $350 a week a year ago. So we know where they are now. They're, over 500, and that's why we're seeing those big increases. The same with Sydney, where unit rentals are pushing up towards $700 a week. Can you believe it? But of course, they were down just over 400 a year ago. So that's why we're seeing those big increases, which is obviously not going to continue because we don't have the incomes growth to support that. But it certainly just shows you those, how the circumstances have improved for landlords over the past year, Graeme, and offset, the 10 increases in interest rates. So vacancy rates, no surprise, they were a little bit up and down over the month of March, but they're still very, very low. I mean, anything under 2.5% starts working in favour of landlords, and anything under 1% reflects a clear chronic shortage of housing, and they're just going to float around these levels, Graeme, I think, for the foreseeable future. They've basically reached ground zero, and that's where they're going to stay. So this is our report. People watching the telecast can have a look at the full report by taking a picture of our QR code there. That's the full March rent report from My Housing Market. Now, we finish off as usual, Graeme, with our last weekend's auction market results. And when we look at these results, there should be no doubt why house prices have risen over March. We keep saying that the weekend auction market is a very reliable forward indicator of what's happening in our housing markets. Weekend auction markets ended the month. Of course, it was the last weekend in the month. Last weekend with more encouraging results for sellers. Despite rising listings, and Melbourne and Sydney clearance rates are now at their highest levels in a year. And guess what? Prices are rising for the first time in a year.
No, don't be silly.
For a year. Please.
Don't be silly.
This is not rocket science, Graeme. Cause and effect. Now, this weekend,
it's not what I see in the news, Doc, and it's not what my mates tell me at the pub on a Friday.
Well, there's a lot of people who like being wrong, that's for sure. And they don't, they're not like chameleons. They just stick with being wrong. I don't know. But as long as you're not making decisions based on the sort of nonsense that comes out, that's the clear thing. Clickbait is one thing, but you need to be making decisions in terms of property based on real evidence and, strong, reliable commentary. And I hope that's what we provide here in the show. Now, next weekend, Graeme, is the first weekend of April for auctions. It will be conducted on April Fool's Day. Speaking of commentators, but it will be Super Saturday this April 1st, April Fool's Day, Graeme. We're going to have very big numbers of auctions. The first or the weekend before the Easter holiday break is typically the biggest weekend for auctions of the year, certainly one of them. But we're not going to see the sort of numbers that we had a year ago because we had that pent-up demand through COVID being released with a lot of buyers and sellers in the market. But numbers will still be in Melbourne well over 1,000 auctions and Sydney pushing up, I think, around 800 auctions, maybe 900 auctions. So it'll be a big test for the market, Graeme. Of course, the reason why we have big numbers prior to auction is because agents don't want to clash with the holiday period. And it's also sort of the meaty part of being earlier in the year. the meaty part of everybody who's made that decision to get into the market after, the first month of activity, thinking, okay, let's do it. And then agents say, well, it'd be a good idea to push our auction to the weekend before Easter. So we've got a fully focused market. They're not on holidays or thinking of this, that, or the other. So it's going to be a big weekend, but that means a big test for the market, Graeme. So let's see if the reasonable results, or the results we had last weekend at least, the good results beyond reasonable, are held up despite, high numbers of listings. And, there's a lot of commentary out there, or some commentary out there, which is really two-dimensional, saying that the reason our auction clearance rates are higher and prices are higher is because there's a lack of stock out there. Well, this is nonsense, because most buyers are sellers and sellers are buyers. So the market is not just about a fixed number of buyers out there, and, prices and auction clearance rates rise and fall according to changes in the number of properties that are for sale. And the clear example is a year ago, where we had very strong prices growth and record listings. It's just, we need more economists, I think, at least more credible economists making housing market commentary. But anyway, I guess they're all shaking their heads as to why things haven't panned out as bad as they were supposed to pan out, and they're just blaming listings at the moment. So we will have a big number of listings next weekend, Graeme. So I guess the theory is that higher listings mean lower clearance rates. We'll see what happens, and it will be something, to start the month off with, some very interesting data. You can see that relationship, and this is March quarter data between clearance rates and house prices in Sydney. Again, it's just reinforcing higher clearance rates, higher house prices in Sydney. Same thing in Melbourne, higher clearance rates and recovering house prices in Melbourne. These are last weekend's results, higher auction numbers across the board. Sydney, of course, had an election, general election, Graeme, last weekend. Bit of a distraction. Maybe that accounts for the clearance rate just being down under that 70% mark. I think that does tend to distract some buyers, but nonetheless, and some sellers, nonetheless, still a good clearance rate there at just under 70%. Hey, Graeme, Melbourne recorded its highest clearance rate in over a year. Over a year, at 74.5%. You got to go
and
back.
And a lot of stock cleared as well, nearly 1,000 pieces of property.
Yeah, that's right. That's right. So, you've got to go back to February. When we look at the numbers last year, you can see that they were higher. And that, as I said, was that hangover from the lockdowns, that pent-up demand from the lockdowns, which was being released. But, higher auctions in Brisbane, better clearance rate there. Another strong result despite big auction numbers in Adelaide. And Canberra also having higher auction numbers at the weekend. So we look forward to Super Saturday, Graeme, next week.
Yeah.
See if that what's been very good energy there, particularly last weekend and particularly in Melbourne, mate. That's just a really strong result for Melbourne. And they'll have big numbers, maybe 1,200, 1,300 auctions next weekend. So let's see if they can maintain the rage, as you say, in business. These are the monthly results. You can see how they've improved really since the trough of winter last year, and are now tracking in Sydney at around about the levels of a year ago. Melbourne similarly has improved this year, in fact, strengthening above 70%. These are the rates over the full month. Brisbane market picking up its rates this year with an improved performance over March. Although Adelaide down a little bit, it's still Australia's strongest auction market. Very good results there. And Canberra, a little bit flatter, Graeme. Canberra's been, I guess, the underperformer in housing market activity, particularly auction markets. I think there are some local factors there that are just keeping the Canberra market treading water. However, make no mistake, once that Sydney market starts to rise, it will pull the Canberra market back up again, as we always see. So a better performance from Sydney augurs well for the outlook for what's been a bit of a sideways market in Canberra so far this year. Those auction clearance rates, Graeme, are available every Saturday night for the capital city headline rates and Sunday morning for the national report, which includes regional breakdowns. And that's me for this week, Graeme. Big week in data, of course, as it always is, to finish the month.
Absolutely.
And interesting numbers there.
And appreciate it as always, Doc. But I think Well, and next week we're going to have that first quarter done and dusted. And I think
Yes.
that it's pretty clear from our conversations each week and the data each week that prices are growing again.
And we predicted this, Graeme.
We did. We also predicted, Doc, I think the terminology we're using maybe 18 months, 2 years ago was that this correction will not be as steep or as deep. I think if you go back 10, 20, 30 episodes ago, so won't be as steep, won't be as deep, and we think we'll come out of this a lot better than people predicted. It won't be a absolute catastrophe. And I guess, geez, it feels good to be right, Doc.
Yeah, well, it's all based on the data and evidence and the historical context, Graeme, and I think that's important. It's not about chasing headlines. It's not clickbait.
No.
A lot of commentators fall into the trap of doing, and we all move on. But as I said, look, who cares? But don't make decisions based on that sort of nonsense because, Australia's housing market continues to prove to be robust and resilient. I noticed US house prices are still falling, but we're now bucking that trend. It's because we have better dynamics in terms of our economy. But look, the future is certainly clouded in terms of the what happens with interest rates. That's going to be a key, Graeme. But as we've seen before, even when interest rates do start to quell inflation, the offset to that is that if the Reserve Bank can't manage the transition period from high inflation to low inflation or target inflation without causing an economic downturn, then guess what it has to do, Graeme? It has to cut rates. And that's what we see during downturns. Believe it or not, house prices actually rise because lower interest rates fuel it. And it's other factors such as demand, underlying demand versus supply. And we know Australia has so much tension in terms of way too much demand and way not enough supply that will continue to put upward pressure on prices and rents, which we're seeing now clearly evolve. And we're yet to see the full impact of migration. And the other thing is, Graeme, in terms of our housing markets, once we start to see the acceptance by consumers that markets are improving, once they shrug off the rubbish that's been published about the outlook for house prices over the past year, they will start realising that, prices are still below where they were a year ago.
Yeah.
This is probably a pretty good time to get into the market. And as they're rising, it's not going to get any better. So that fear of missing out energy starts to become a reality in terms of pushing up prices. But Sydney's leading the charge at the moment, and it led the charge down. It's now leading the charge back. And, of course, the national debate about where house prices are going nationally is driven by Sydney and Melbourne because basically they are the national house price. So next week we'll know what's happening with interest rates, Graeme, so that'll be interesting.
Yeah. Well, stay tuned. Fingers crossed, ladies and gentlemen. But you heard it here first, as always. Thanks for tuning in. And Doc, we'll see you Friday night, and we'll see everyone again next week.
Yes, we have April Fool's Day auction results. And speaking of April Fools, we'll have the Reserve Bank decision on interest rates as well next week. So plenty to talk about. And we'll have building approvals and we'll have home loan data, and it keeps on coming.
Yeah, there's a lot of data to come through next week for everybody. So,
and you get it first.
As always, thank you, Doc. We'll see you all next week.
Yes, thank you, Graeme.